Hey everyone, this is Mike Kramer of Mott Capital checking in for tomorrow, Friday, September 29th. We're going to be getting the PCE inflation metrics. Expectations for the month of August are for it to climb by 0.5%, up from 0.2% last month. PCE month year over year, we're expecting 3.5% versus last month's reading of 3.3. For the core, we're expecting a flat reading, 0.2%. And for year over year, we're looking for 3.9%, which would come down from 4.2%. So this will be an important reading. And then, of course, also at 10 o'clock, we're going to get these 5 to 10-year inflation expectations out of the University of Michigan. This is important because the last preliminary reading was a big decline unexpectedly. And so you're going to want to see if this number is actually revised higher when the final reading comes out. That's something of note. Also today, it's worth noting in the S&P 500, you can see that we've managed to rally so far, but we haven't made it very far back to 4,300. You can see we got up and just a little bit above this 4,305 region two times today, and we're unable to hold it. This 4,305 region really is important because it dates back to this August 2022 high. Also, if you notice the red line here, this is the long-term trend line off of the October low. And so far, it seems like we're just stuck in between a rising trend line and a horizontal level of resistance. And then, of course, right below this red line, you have the 200-day moving average. So there's not really much to talk about in terms of the S&P. We also have the 10-day exponential moving average up here around 43, 45. So, I mean, if you're looking for the S&P 500 to rise tomorrow, you need to see these levels taken out really quickly, and then that maybe opens the door to a rally to around 43.35, 43.40 or so, with this larger gap up here maybe to be filled at some point later next week at 4,400. Likewise, given that we got to this level, tested it a couple of times and weren't able to close above it, is sort of a negative pattern. And additionally, what was also negative is that you can see we were, rallied most of the day. Then we came down. We were, trading below this high at the end of the day. We sold off pretty hard into the close, and really didn't accomplish much for the last, for most of the afternoon. So this is something worth paying attention to tomorrow. Again, you're going to want to see this taken out fairly quickly if you're looking for upside. Otherwise, I would be looking for a retest of this low around 42.40. When we look at the Dow, sort of a similar picture here. The Dow, again, has been what looks to me to be a broken index. We came down, again, we tested this level right here at 33,560, but really not really going anywhere. We actually finished within the confines of the bar from yesterday. The 200-day moving average is right up here at 33,825 or so. So that's also likely to serve as a resistance level. For the Dow, again, you need to take out these highs very quickly today from today's levels, and that maybe opens the door again to a retest of 34,000 or so, or the 200-day moving average. Otherwise, anything else, you're probably looking at a move back down to 33,300 or so. When we take a look at the NASDAQ, again, a similar sort of view. What's interesting here about the NASDAQ is that you have this green uptrend, which comes off of this January low, and you can see we got up to it, but weren't able to hold the rally through it. Additionally, this also served as resistance around this 14,725 level. So this is again a big resistance area. Here you can see the 10-day exponential moving average up here at 14,850 or so. These are really tough resistance zones. They offered very strong support when we were moving higher, and when they offer support, those tend to turn to resistance as you're moving lower. And it seems to me that at least, again, if you're looking for a move higher, it's really all about taking out these highs early. If you're not able to do that, I think that's going to just raise more question in terms of whether or not this can really hold or not. When we take a look at some currencies, The euro had gotten extremely oversold, and we're getting a little bit of a bounce. Would it be surprising to see the euro climb back up to the 10-day exponential moving average of 106? Certainly don't think so. It would be probably what one would expect at some point, and that also coincides with your longer term downtrend. So until you break this long-term downtrend, which has been clear resistance, again, I think overall the trend probably for the euro at this point is lower. But again, I think that there's potential for it to rise to around this 106.05 area in the very short term, unless, of course, it takes out these lows, which would change the game and potentially set up something much steeper. When we take a look at the British pound, that's also been trending lower. We finally got a little bit of a rebound again today in the British pound. This has also been trending lower along the 10-day exponential moving average, also very oversold. There's just a lot of resistance up here around the 122.75 area. So again, this is just going to be key because there might be some more room to rise very short term, but you really want to watch these levels down here because if these break, there's just not much there to really support it on the way down. And then when we look at the yen the yen's been kind of scraping up against the upper Bollinger Band, although it's not really gotten overbought yet. The yen seems to be very cautious up here as we approach the 150 level because there's a lot of expectation that the BOJ may intervene up at these levels. Certainly they did that last October, so it's worth noting that this is a level where we've seen the 10-year, where we've seen the yen really stall out and begin to slow just because this is a major level where markets fear potential intervention. I think generally speaking, though, the yen looks like maybe it wants to trade back below 149 or so, just based off of this downtrend. And one looks like potential here for support to be broken. Likewise, if this trend line breaks and you take out this 149.70 level, then I think you're off to 150 or so, barring BOJ intervention. So I think tomorrow sets up pretty interestingly. Just to circle back again to U.S. equities, I wanted to mention that when you look at the XLK, you saw a very similar pattern with testing resistance after it had been support. When you look at the XLY, you also had a very similar sort of move higher today, not quite getting to the resistance level, but also not being able to advance through it. And if you look at the XLF, which I think is worth looking at, you can see we got up to what could potentially be the base of the neckline of a double top pattern, and we weren't able to get through it. So this pattern we saw in the S&P today, the pattern we saw in the NASDAQ, the pattern we even saw a little bit in the Dow is not an uncommon pattern that you're just seeing across the market. And that's why I think you just have to, again, just be a little skeptical of any moves until you can really confirm with any sort of certainty that the highs from today are clearly taken out, which would open the door, obviously, to a higher move. But until that happens, I think it's a suspect move until proven otherwise. Anyway, that's all I have. I hope you have a great rest of your week. Bye.